So let's go to the topic for today. Ambrose now gives me a topic, but I always try to divest. I have about 7 chart patterns which I normally watch and which we've tested over the past 10 years in TLW. And it has worked in our market. Because a lot of people say all these things don't work in the market. But I'm going to prove to you today that most of these chart patterns everybody writes about all over the world. In terms of TA, all those things are in our stock market. So let me just give you the introduction before we go to the... chart patterns are the key to finding the breakout, which leads to big stock trends. The breakout from a chart pattern signals the beginning of a trend that could develop into very large profits. Before a stock breaks out into new highs, it forms a pattern. The goal is to capture a major trend. These chart patterns signal when a stock is about to make a major move. Before every major move in a stock, there is a period of consolidation in the price action of the stock. This can be referred to as resting period or pause. It is at this time when you should pay attention to the stock. The moment that price breaks out of the pattern, then that's the signal to trade. Now, most traders are familiar with a few chart patterns. It is essential to understand when and where to enter the trade. When learning stock trading, chart patterns are the most common starting point in trader education. Chart patterns are a form of technical analysis and can be found in every time frame, short, long, or medium. There are a number of useful chart patterns we watch here at Trw-Stockbrokers, and they are very useful to understand the current structure of the market and quickly assess our trading opportunities. The statistics on the price action patterns below were accumulated through testing of 10 years data. In all these cases, the price action patterns were only included once they are considered to be complete, which usually means a full break of support and resistance areas. The requirement is a completed pattern are discussed below for each individual case. So the key point we are going to be looking at here is, apart from the pattern, we're looking at any stock, anything that has data. Anything that has data, even your dollar, your pounds, there's always a benchmark. There's always an area it gets to. It gets stocks and comes down. If it breaks out, then you know that we are now recording something new. So basically what chart patterns look at is that we look at what particular trend is that stock doing now. And one of them, it's the first one I'm going to look at, we call it a bull flag. What this pattern is telling us is that a bull flag is supposed to be a continuation. Flags are continuation patterns, either up or down. So what these things are showing us is that prices are going up, right, down, and within that period, we have drawn a trend line. So within this period, the stock is bouncing, it's like inside a pipe. It's bouncing up, down, until it finally finds a breakout. And this is your support, that's your resistance. So it's trending within that tight pattern until it finally breaks out. So prices move within that period before it breaks out. Just like Access Bank now, right? Access Bank is trading within a support and a resistance. Okay. You can see that as an example. The yellow is the support. The blue is the resistance. So I've drawn a line. So that if I want to trade assets, I have a gauge, a range to trade assets. Because where most investors or traders have problem is when to buy or when to sell. You understand? So these things act as a guide to give you when to buy a stock and when to sell a stock. The same thing goes with, because what I'm going to go through all these things, then we'll now start going to the live charts direct. Then after showing you some of the charts, from what you've seen, I'll open up a chart and you tell me what you can see, if you can see any trend, because that's the best way to assimilate. The bear flag is the opposite of a bull flag. That one too is a continuation trend, where prices are, that means what we are seeing is that prices have come down, is trading within a tight range, which is upward, and finally breaks down to the downside. And to read on the flag, let me just give you a preview on the flag. Flag is a continuation pattern that can occur after a strong trending move. It consists of a strong bullish trending move followed by a rapid series of lower highs and lower lows for a bull flag, or a strong bearish trending move followed by a rapid series of higher highs and higher lows. These patterns are small hesitations in strong trends, so they are usually only composed of small number of prices bars. Longer and wider patterns are defined as channels. The flag pattern are small rectangular that are usually tied